What if I told you a war thousands of miles away just wiped billions from the world's most exclusive brands? This is Kenya News Update today. Coming up, you'll discover how a conflict in the Middle East is causing luxury stocks to crash in Europe and why this economic shockwave could hit your wallet. The Hermes bag, the Cartier watch, the Gucci loafer. These are symbols of ultimate success. But today, they're symbols of a market in panic. Luxury stocks were among the hardest hit sectors early Tuesday. European markets are heading for another day of losses as the conflict in the Middle East intensified overnight. Shares of conglomerate LVMH, Gucci owner Kering, and British outerwear maker Burberry were among the worst performers. Their week-to-date losses are approaching 10% each. The wider European blue chip index, the Stoxx 600, was down nearly 3% Tuesday, after falling 1.6% on Monday. But here's the twist. This isn't just about rich people's handbags. This is about one of the last engines of growth for a struggling industry suddenly shutting down. Meet the Middle East. For luxury giants, it's been a driver of growth in a sector battling a difficult macroeconomic backdrop. Many formerly best-selling brands are struggling to resonate with consumers. The region's strength, however, hasn't been enough to offset weakness elsewhere, notably in China. Industry giants like LVMH and Kering are still struggling to get sales back on a positive track. Morningstar analyst Jelena Sokolova told CNBC, "The Middle East has been one of the few bright spots. You have one area which was small, but which was very, very vibrant, and it's being affected now." And then, something shocking happened over the weekend. The US and Israel launched widespread attacks on Iran that killed the country's supreme leader Ayatollah Ali Khamenei. Iran responded with retaliatory strikes. The conflict now engulfs the wider Middle East region with no clear endpoint in sight. US President Donald Trump has said the war could last for 4 to 5 weeks, but that it could go on far longer than that. Here's the part that will blow your mind. This conflict is directly hitting companies you know. Shares of Ricky Mott, the owner of Cartier, Van Cleef & Clay, fell heavily on Monday and Tuesday. Why? They have a relatively big exposure to the region. One bright spot extinguished. So what does this mean for you watching from Kenya? This is about global economic fragility. When luxury stocks, seen as a bellwether for consumer confidence among the wealthy, tumble this hard, it signals deeper fear. Investors are fleeing to safety. The ripple effects can impact pension funds, mutual funds, and the overall stability of markets connected to our own. Some say this is just a market correction. Others say it's the first tremor of a larger economic earthquake triggered by geopolitical chaos. But here's the unanswered question. If the wealthy stop spending on luxury, where does that money go, and what does it mean for global trade? The stakes are high. This isn't just a story about stocks. It's a story about how interconnected our world is. A conflict in one region can vaporize wealth in another in minutes. Do you think this market crash is a temporary blip or the start of a major downturn? Drop your take in the comments. Subscribe to Kenya News Update today for more on how global events shape our local economy.